Hello everyone, this is the second session of our Crypto Special. Thank you very much for all the kind messages that you've sent us. Your feedback means a lot to me. In the first session, we have covered the basics of the Wyckoff method, and today we will discuss also two very important concepts, comparative strength and the anatomy of momentum. We will also review together the analysis that I published last Saturday in the Crypto Report. So today's lessons will be more interactive, and I will show you a couple of exercises too. As usual, everything we discuss in this class is for educational purposes, received by one of the students of this class. What's the first step in the analysis of the crypto market? In the crypto report, I usually start my analysis with a weekly chart of the S&P and Bitcoin. We want to define the big picture of the market. Many traders today use two indexes that we can easily find on TradingView, Total and Others. These two market cap indexes are calculated by TradingView. The first one is the index of the global market cap, Bitcoin plus the altcoins universe. The second index represents the low caps, the most speculative crypto assets. As you can see, both indexes shows a multi-year consolidation almost in sync with the S&P. After the 27 hypodermic, the majority of altcoins have experienced 80% losses. When the whole crypto market is in the markdown phase here, holding a position to the highly speculative low caps can really destroy your portfolio. And you can see this in the first part of the chart. This is another reason to always keep in mind the big picture of the market. That said, the crypto market is so vast, and there are thousands of low caps today, and just looking at these two indexes do not tell the whole story. I'm not a big fan of these two indexes. I think that they are very good for long-term analysis, but this is a very speculative environment where a lot of new assets are listed every day, crypto companies fail to reach their goals and are replaced by new projects, and that can happen in just a couple of years. So it's a very competitive scene, and capital quickly rotates from one asset to another. If you just focus on two indexes, you will miss a lot of opportunities. For example, in this picture, you can see Bitcoin at the top of the chart and Chainlink in the middle. The third asset is ICX Icon. Bitcoin is still today the most capitalized cryptocurrency. It's the oldest time-tested cryptocurrency. It has very good financial gateways, CME futures, over-the-counter desk for big institutions, and so on. When the global markets are in risk-off mode, we generally notice a kind of flight to safety from very, very speculative crypto assets to the king of the crypto ecosystem. However, as you can see, Chainlink was holding much better than Bitcoin during the 2018 bear market. This outperformance still continues today, and Chainlink is one of the leaders of the crypto industry in the current market cycle, and we will talk about this structure later. The chart on the bottom, ICX, shows a very severe downtrend throughout 2018. This is a logarithmic scale from $10 to 1 cent in just 1 year. Oh boy. Same sector 3 different charts. Speculators in this market need much more detailed information than just these 2 indexes. The total and this, basically. Others, totals and others. It's a matter of preference, by the way. But later I will show you more modern indexes to track the crypto market with good volume data, indexes that you can use right away in your everyday trading routine. Now a very common question. There are so many crypto exchanges today. Sometimes 2 crypto exchanges have different volume data. What ticker do you use? As for Ecofians, we always want to track the activity of institutional traders. Crypto funds love to trade in very liquid platforms like Binance, Kraken, BitMEX, and Coinbase. BitMEX is still today the most important derivative platform in the crypto space. This is the place where giant crypto funds professionals move a lot of money speculating in this market. But do you see any significant difference in the volume data here, guys? Here, 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 here. As you can see, the volume signatures on the daily charts of these major exchanges are very, very similar today. On the intraday, you can sporadically find some difference in the volume signature, there is no doubt. But at Wyckoff Analytics, volume is our specialty, and I personally look at this volume data every day, and there are no excuses today to not trade these instruments. In the altcoin market, sometimes it's a bit hard for beginners to find the right data because some assets are more traded in the US exchanges, while other assets are traded mainly on Asian exchanges, and so on. Here's a very simple trick that will save you a lot of money and time. I highly recommend this charting platform for cryptocurrency, Messari.io. You can just use the free version. There is no need to subscribe to the pro version. Just type the name of the crypto asset that you want to analyze in the search box, in this case, Cardano, ADA. Then you go to indicators, add volume chart, and that's it. You have the full data history of 90% of crypto assets, and the volume data that you see on the charts has been aggregated from several exchanges. This is very important. In this way, in one place, you get the whole history of the crypto assets with the best volume data for free. The volume data that you see on this website is, for me, the most accurate. They don't have point-of-figure charting, but you can find that on TradingView and stock charts. Stockcharts.com is the best platform for point-and-figure charts. So here's my classic perspective on Bitcoin and the S&P. As we have said in our first session, Bitcoin is a good barometer of the speculative sentiment of the market. When the financial conditions are uncertain, money managers reduce their positions in the most risky asset classes. Look how Bitcoin often anticipates top and bottom of the stock market. Here, here, here. And in the previous session, we have analyzed the previous 2 market cycles. Now let's recap the price history of the current consolidation. I have discussed this consolidation many times in the crypto conference on Stock Charts TV, so let's be very quick. Guys, what's the name of the price action at point? Let me change the slide. At point 1. Please write in the chat box. Point 1. At point 1, we see a classic hypodermic top, a formation where institutions have urgency to sell. Speculators and newbies are punished. We have analyzed in depth this distribution in our previous session. A downtrend starts, all the media cover very bad news for Bitcoin. Every newspaper title, we say that Bitcoin is a scam. If you want to invest, buy stocks. Ironically, just a couple of weeks later, we see a big correction in the stock market. The distribution in Bitcoin was a first signal that CEO types were limiting their exposure to risky assets. This is the start of a multi-year consolidation in the S&P. Huge consolidation. Now, what's the name of the event at point 2? Here, please write. Point 2 here. Great. Selling climax. The price area around 6,000 is very important. It's an important value zone for institutions active in this market. Value buyers step in, automatic rally at point 3. At point 4, what's the name of this event? Great, secondary test. Now look at the decrease in volume at point 5 in this area. Very often, after such an hypodermic top and a very aggressive downtrend, trend followers are scared by this market and they do not participate. These lackluster rallies on decreased volume indicate low institutional participation. We will explore the same pattern also in the small crypto caps, where after an initial speculative phase, market participants fly away, price stalls, weekends capitulate, and the CEO step in and absorb the supply on the way down. Point 6. In this context, price collapses to 3,000. This is a very oversold area. Massive volume. Look at the S&P. Bitcoin is anticipating the bottom of the S&P. Beautiful. Is this action a potential absorption? Yes, we see a lot of absorption here. But is this price action enough to say this is an accumulation? No, that's a big question mark at this spot. The up bar at point 7 answer our question and confirm the accumulation bias. And we will review this accumulation range in a very detailed way in the final part of the session, but let's just focus now on the big structure. Point 8, big volume and then stopping action. Institutions are taking profit. We are not ready to break the level of the automatic range. We still need to absorb the supply at this level, and there's a huge amount of supply here. At point 9, we see some kind of absorption, the increasing spreads and volume. And this is a very important price level. We'll say that around 6,000, there are a lot of value buyers that usually want to buy Bitcoin. And then what we see, the selling pressure of the market, and just look at this very horrible price action here during the COVID crisis, affects Bitcoin as well. But what do we see at point 10? Shakeout, followed by a quick recovery, in both the S&P and Bitcoin. Oops. Okay. So this is the chart that I published in the last crypto report. What's the logic here? First observation. We are in an uptrend on the S&P. Quick momentum move, absorption on the way up, change of character, reaction on the top of the capitulation bar. We are in a consolidation. Same story for Bitcoin. The consolidation Bitcoin